Hello traders, this is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. In this video, I will share how to find intraday buy scenarios in a discounted market. Going into a new trading day, many traders are waiting for colorful and flashy indicators to determine where they should enter a buy. I'm going to show you where you can find buy opportunities and tips on how to trade each session, so keep watching or you will miss out. Leave the indicators alone. If you are new to this channel, the information will be broken down into a 3-step process: core curriculum, chart activity, and lesson plan. Let's jump right into our core curriculum. What is discount? A discount is a deduction from the original value of something. The value is cheaper than it once was when it originated. Who is using discount? Commercial speculators are seeking buys in discount. Why buy at discount? Buying at a discount is high probability for buy setups. Would you rather buy a pair of sneakers for $50 or wait for a 50% sale tomorrow? When is price in a discount? Price enters a discount when it's lower than the start of the trading day. Where do I find discount? Discount can be found below the midnight opening price for the current trading day. It can also be found below the opening price for the current trading session. How to use discount? If price is in a discount, seek a buy opportunity. Let's take a look at our chart activity. First step you must follow is marking off the start and finish of the trading day. Step 2, find the opening price at midnight, New York Eastern Standard Time, 12 a.m. Step 3, project the opening price to 12 p.m. New York Eastern Standard Time. Let's look at an example on some charts. Here we're looking at Euro versus the US dollar, which is EU. For this example, we're going to be using our current weekly range that we're trading in. We're going to mark off all full trading days that we have thus far. So Monday all the way up to Thursday's current range. I have marked off all the trading days. So this is Monday, this is Tuesday, this is Wednesday, and this is Thursday that we are currently trading in. Now next, I need to find the opening price to each one of these days, which is going to be 12 a.m. midnight opening price, New York Eastern Standard Time. Now, if you don't know what New York Eastern Standard Time is, where you live in the world, just change your trading view settings to UTC New York and find 00 GMT. That is going to be midnight opening price or 12 a.m. in New York Eastern Standard Time. That would look like this, finding 12 a.m., the opening price, and drawing it out to 12 p.m. Do the same thing for Tuesday. The opening price is here. I'm going to take it and draw it out to 12 p.m. Wednesday as well, the opening price is here. Draw it out to 12 p.m. in the afternoon. Likewise, Thursday, it's a down close candle, so we know the opening price is up there. We're going to draw it out to 12 p.m. Now, what you have just done is figured out the opening price for each one of these trading days. You have essentially found fair value to the marketplace or fair value for that current trading day. When price opens, that is fair value. Anything below this price point is discount. Doing this chart activity, we can see where the dynamic buying is mainly occurring. It is now obvious where high odd buy scenarios are unfolding. We do not need any indicators to tell us where oversold levels are and where to buy. Price action tells us everything we need to know to be successful. However, having a keen eye for detail is important when it comes to trading. Let's think about this. Let's say we were the market makers and we wanted price to go up tomorrow. Where would we buy? Yes, the logical answer would be below the opening price, because price is now cheaper than what it started as. Think about your favorite retail stores and think about the products that they provide to you. Do you think that they are buying from suppliers that are expensive? Odds are they want to buy from suppliers who are cheaper for them to make the product, and then they sell it to you, the consumer, at a premium. That's exactly what is occurring with these transactions in the marketplace. Let's take a look at our lesson plan to formulate a process to be a buyer. For the lesson plan, as always, you're going to be looking at price action, which is our technical analysis. Then we're going to be incorporating midnight opening price, which will bring us to our hypothesis, defining a high odd buy scenario. Let's take a look and look at the key details. Looking at Monday, we can see the dynamic buying is occurring underneath midnight opening price. The commercial speculators are looking to sponsor their long positions below this price point because it's cheaper for the start of the day. Now, we know the Forex market is comprised of 3 main sessions: Asian, London, and New York. Each one of these sessions has an opening price. Let's check that out. What you're observing now is all 3 sessions. London is red, New York is blue, and Asian is green. We're not going to be looking at the Asian session here. We're primarily going to be focusing on the London session and the New York session. Let's take a look at the London opening price. London session starts 1 a.m. and ends at 5 a.m. and New York session starts at 7 a.m. and ends at 10 a.m. So the same concept of opening price, we're going to mark it out. It starts here. We draw it out. This red line is the opening price for London. So we go London opening price. Anything below this price point is going to be discount. We can see many times where price comes below discount and rallies. Comes below discount, rallies. Comes below discount and then rallies. This is the same thing with midnight opening price. Price comes below the opening price and it's now cheaper for the day to buy. The same thing is occurring in all these sessions. It has an opening price. If the commercials want to buy in this session at the best price possible, is going to be below London opening price. The same thing can be said for New York session. We'll look at New York session. We'll make this blue. And we'll mark it out. So this is New York session opening price. We can see here, price does not give us that well-respected discount buy, but it does come back down to fair value, which is a sensitive price point. The opening price is still fair value, so you can see that there was some type of sponsorship here when price came up, came down, and then rallied. But even from here, you see a quick drop at the beginning. So 7 a.m., 7:15, we're well below. I wouldn't say well below, but we're below the opening price for the session. And you can see the sponsorship comes in here, comes up, hits it again, and then rallies away. Let's take a look at Tuesday. Hindsight, of course, we can see price was moving sideways, but the same principles still occur. You can see the opening price for the session is here, 1 a.m. Price drops well below it, and then sponsor their buy down here, and you can see it comes back above that price point here. Price then drops down again, drops down below New York opening price, drops down below 12 a.m. opening price, and you can see there's sponsorship down here. Price then rallies. Normally, I'm looking for the sponsorships after a swing low has been broken or a low has been broken. That is a tip. So if price broke a swing low, so you can see how all these lows are broken. Swing low here, swing low here. Price the session starts and sweeps this low one right here. This one here. Sweeps a 15-minute swing low. I'm trying to find some type of buying opportunity here because we're at a discount for the session and we're at a discount for the day. Notice the confluences here. So we're below the session's opening price, so it's cheaper. Let me put it right here because it's not accurate. We're cheaper for the day, right? Because price drops down. We're below 7 a.m., so we're in a discount for the session. And then it drops down below 12 a.m., so we're in a discount for the day. Then it runs a low, and then the buying opportunity is sponsored right here. Let's take a look at Wednesday. For Wednesday, we can see that we have midnight opening price here, which is the discount for the day below here. We could then look at the London session. Session opens here. Price drops below it, going into discount territory for the session. It's below 1 a.m. opening price, so now it's cheaper to buy. It then also comes below the day's opening price, so now it's even cheaper to buy. Then it sweeps a 15-minute swing low prior in the Asia session right here, and then the buying opportunity occurs right there. And price then gives a nice dynamic move to the upside. You can see going into New York session as well, price drops down, right? Drops down below New York session opening price. 7 a.m. it drops down. Anything below that opening price, it's discount. It is cheaper. High odd buy scenario. Price then drops below midnight opening price as well. Higher odd buy scenario as well. Price then rallies right away. And you can see it takes out these double lows, right? The swing low right here rallies down into it, and then it rallies back up. And now let's look at Thursday. It's Thursday that I'm recording this video for. You can see the opening price for the day is here. So we'll mark that out. So this is midnight opening price. I'll just leave it as an acronym. That's 12 a.m. midnight opening price. Then you have the London session's opening price, which is here. I don't like when the candles are in front of it because some people can't see it, so I'll just draw it out here. This is London's opening price, and it will make it red. Look at how for London, Price opens here and drops down. Drops all the way down below the opening price. Discount. Buy scenario. Rallies back up above midnight opening price. Comes back down into it. Below into discount again. New York session. This day was kind of back and forth. You can see New York session here. Opening price. Right down here. There we go. We'll make it blue. This is New York session open. And you can see multiple times. Price comes down below discount. Even sweeps the swing lows in London in the prior session. And then rallies higher. Price comes down here because it's cheap. It's cheap for the day. It's cheap for the day and it's cheap for the session. Price then rallies back up higher. It does it multiple times. It does it here. Rallies, comes back down. Rallies, comes back down. Rallies again. So all the buy scenarios were occurring where? Discount. The commercial speculators want to buy at the cheapest price possible. Retail traders are buying at a premium or buying at a high. That is what's occurring. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoyed this video, then I think you enjoyed these as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.